question on the impact of the subprime crisis and the loss of liquidity around the world today. How do you see that impacting your business?
Okay, for the screen-based products like WTI, gold, and even the CME products, there has been some impact on the CME products because a lot of the products they have, like interest rates, are traded by the banks. If they have a liquidity issue, if they have it of course impacts the trading volume. I think there are releases that came out of CME to explain that. For us, fortunately, it has not affected our overall volume. It has grown quite a bit. But we do realize that a lot of our customers have got liquidity issues, and that has impacted the swaps market, particularly in Singapore. The swaps paper market has dropped significantly in volume. Fortunately, because of credit issues and because of the understanding of Clearport, our Clearport volume has actually grown very significantly. It's about 100% growth year on year. That is something that we brought in. It will not be possible without an exchange-cleared OTC platform, because you would require the guys in London and Geneva to sign ISDAs with all the players here, which they will not do with the volumes that they do. So we have done a good job in promoting that part of the business.
Are you able to disclose actual volume of trades done in the past and currently? We use percentage.
Yeah, we used to trade we used to clear probably about 1,000 lots or 800 lots of OTC swaps a day.
All kinds of products.
Well, just Singapore energy products. I must qualify that, because later I'll give you the number for overall Clearport products. We're just talking about OTC cleared, okay? Because our screen-based volume is separate. That has grown. You can see that on in our website all the time. So it was about 700-800 lots. Now we're doing about 1,700, 1,800. So we basically doubled the cleared volume year on year.
Going forward, do you foresee the volumes to drop as a result of this liquidity crisis?
Well, you see, that's where we're not that concerned about it. First of all, we bring in the number of players in. That has to be there. The number of people who look at the market has to increase more than the volume. If you have a huge number of people looking at it, and there is a need, intrinsic need to use it, eventually the credit crisis will disappear. Banks will go back to loaning money, and they will, at first they will cherry pick the best customers to give them. And there are a lot of companies in Singapore that are very good, just can't get credit because of their bank being in trouble. But once they start getting more credit, they can trade up to where they need to trade.
Do you see these 800 lots that you recently achieved?
No, 800 lots, meaning what?
Yeah, the year to year.
Okay, the extra.
Yeah. Do you see that maintained going forward?
Touch wood, I hope so.
Yep.
It's difficult to, at least in the next 6 months, we do see, I can probably see order flows coming in, because we see a lot of new participants that are coming into the market. So the growth, I think no problem for 6 months.
Where are they coming from? Are they from Asian companies who have not been hit by the credit crisis?
No, okay. Everybody's been hit.
Yep.
But there are a significant number of people in Asia who are not using exchange-cleared OTC products in. So they have huge credit lines that they don't utilize to. See, they still hedge it with swaps, but they just do an ISDA trade. So they don't have margins for that. The problem with doing an ISDA trade is you take on your counterparty's risk. If you trade with a company and it goes down, they are unable to pay you the difference. This company it's like you loan them money. You can't get the money anymore. This is why when CEO went down, a lot of other companies suffered losses, because CEO owed them money which they were unable to pay. So it's the same concept. If you do an ISDA trade with somebody and they go bankrupt, you're unable to collect from them the money that you have won from them. So by going exchange clear, your counterparty ultimately is the NYMEX, or going forward is the CME group. So the risk mitigation is there, and that's why a lot of people are moving on to it, because right now they don't even know who to trust. So that has been building as a result of that, but also because we've been reaching further offshore than Singapore and getting people in to clear their products.
Specifically, would you say that you're seeing new clients from China?
Yes.
Those are the people you're
China,
targeting.
South Korea, Taiwan, Australia, Japan, to some extent even India.
Middle East?
Middle East, no.
No.
Well, not for Singapore-based products. There are some products from the Middle East that they are trading, but not the Singapore.
How closely are you working with the industry in Singapore? Do you have close ties with the brokers, for example?
Yes,
do they send their clearing through?
Yes. We have close relationship with the major customers and the brokers, and also our distributors who are clearing members. So we want to have good relationships with them because we want them to promote our products as well. They are our distributors. So we do have a tight relationship. That not only applies to NYMEX products, it applies to CME products as well.
The history of energy exchanges in Singapore has not been a good one. You're probably aware of that. We've been trying for the last 20 years to get a good exchange and good exchange products going. So how do you think you're going to succeed this time? NYMEX came in the 90s, I believe, tried a couple of times. And, so
we have a 380 contract, bunker fuel contract, physically delivered in Singapore. We launched it, I think, late 06. Not traded. Okay. We do feel that this contract has a chance. We do want to look into it. Currently, how we intend to approach this is build the liquidity and the trading interest in our WTI contract first. Okay, make sure there's a base group of people during this time zone trading our markets, looking at our screens, and then maybe insert the 380 at a future date and have some of these traders migrate to trading the 380. Okay. When we launched it, we didn't have much liquidity during the Asian hours. So we were basically trying to get the physical trade to come in and trade it right off, which may not have the diversity of views that is required for a market to exist.
The fuel oil market traders, the traders in fuel oil are more comfortable doing a OTC business.
Yes.
So, and a lot of them will refer to Platts for the price discovery.
They do a good job. Platts does a good job.
Is it possible for NYMEX to actually hook up with Platts to offer something via the Platts screen instead?
We would rather not have a clear separation. That's why we won't get into a price business, and therefore we will not insert ourselves into the price reporting business through a platform, because then we want to have a clear separation. We understand that what they do very well, and what we do very well. We don't want to mix the two, because then you have a situation where there may be a conflict of interest. And you don't want to run into that wall.
You see, that traditionally has been the problem with Singapore, because the price discovery process has taken on a life of its own.
Yes.
And traders, for some reason, have preferred to use that to base their trades on. So instead of fighting that, wouldn't you be better off actually teaming up with them?
It is not our business to be in the price reporting. We use it to clear swaps, but we don't actually use it for any of our screen-based product. So that is something that, fundamentally, we don't subscribe to at the moment. That's not to say we will never do, but it's something where our products are physically delivered. We believe in the structure of the physical delivery and how it anchors the prices.